Then looking for this. Okay, so we finished question 3. We're now going on to question 4. Let me just rotate this here. Sorry. All right. Cool. So what's happening over here? Let's see. Is there required? Right. Under the required, it says use the relevant transactions from those given above to complete the following journals and general ledger account. Document numbers are not required. Okay. Debtors Journal for March 2018. Total only the debtors control column. Then they want you to do the debtors allowance journal. Total only the debtors control column. General journal, narrations are required. Okay, take note of that. And then finally prepare the debtors control account, which has an opening balance of 256,700. Balance the account. Okay. So this is probably in the general ledger that they want you to do that. Okay, no problems there. Let's see what's going on with the information given. Okay, White Traders is run by Wally White, a sole trader. White Traders is a general dealer who uses the Perpetual inventory system. Remember, the accounting equation was on what? What system? Was on the periodic, and here this is the Perpetual inventory system. I have not seen this. I've not seen from the papers we've done. I have not seen them once put like the accounting equation Perpetual, journals Perpetual. They always are doing this where one is periodic, the other is Perpetual. Okay, so just take note of that. The business is a registered VAT vendor and trades only with registered VAT vendors. The business charges 14% VAT on all its sales. All amounts are inclusive of VAT unless VAT is not applicable. Nothing new there. They deposit any monies received on the same day. Oh, that just makes our life easier. Okay, so you know whatever enters analysis of receipts goes into the bank immediately. Okay, White Traders does not expect to reward any settlement discounts, nor does it expect to qualify for any settlement discounts. All settlement discounts are therefore deemed to be incidental in nature. I don't know why they always add this in your questions, whether it's your textbook or your exam papers and stuff, because they're always going to bring settlement discounts after they've said this. I don't know, it's just a waste of our time, to be honest, in my mind. But anyway, let's proceed. Transactions, amounts, others. Yes, amongst others. Transactions amongst others for March 2018. Okay, then there we have our transactions. Okay, so let's read these and see which journals are affected by each transaction, and then we'll jump into the necessary journals that we are obviously doing. So sold inventory to Kayla, all right, credit invoice CI 54 for 36,000 excluding VAT. Markup used 50% on cost. Okay, no problem. So since we sold on credit, all right, which journal is this going to affect? Debtors Journal. Okay, then we move on. Next one, weekly cash sales of inventory. Okay, immediately we know since it's cash receipts journal. Okay, and there you have the markup. Okay, so here they gave us different markups. Okay, no problem. Next one, Kayla returned damaged goods, 3,600 excluding VAT. White traders accepted the return and issued a credit note. Okay, right, no problem. That was excluding VAT. So that's going to affect your what? Debtors allowance journal. Excellent. Then the next one, the owner took inventory for his own use. The selling price of the goods, include VAT, was 31,350. Okay. So which journal is this going to be recorded in? The general journal, okay? Right. It can't be recorded in any other, so definitely the general journal. Sold inventory to Walter for 72,000. Okay, cost price 31,750. Which journal is this going to be recorded? Why the Debtors Journal? You know, the funny thing is, I also wrote here Debtors Journal on the side, but there's nothing indicating it should be CPJ. Because remember, if they don't give us anything that indicates or alludes to the Debtors Journal, then obviously we just assume that the transaction was done for cash. Sorry, yes, for cash. So it's not the cash, it's not the CPJC RJ.
Oh, yes.
Yes, cash receipts, because we're the ones who sold. Yes. Perfect. Then we go to the next one. Accepted unwanted goods returned by Walter. Where? 2,850. That's going to affect your debtors allowance journal. Okay, let's go on. Then we go on to the 23rd. Kayla paid 40,000 per check. Okay, and was given a settlement discount of 1,710. Settlement discount. By EP. Okay, so this is going to affect your CRJ for the money that has been received, and also the GJ in terms of the discount. Okay, Walter has been declared insolvent. His account of 69,554, 540 needs to be written off. Okay, so when I read the transactions that follow, it would seem that the inventory we sold on the 11th was a credit transaction. Because can you see there it says his account of 69,000 needs to be written off. And then the one on the 12th also tells us that he returned unwanted goods. That would affect typically your debtors allowance journal. Can you see that? But when I read the transaction on the 11th, it doesn't allude to anything particular in terms of the cash receipt. It doesn't allude to it being a cash transaction. It doesn't allude to it being a debtors transaction. So I would actually use the transactions that follow to guide me on that one. But yeah, I think they should have given a little more just to indicate, should we have it in the cash receipts or should we have it in the debtors journal? So I'll go with, I think that's why when I look at my script, that I actually indicated the debtors journal as a result thereof. So let's jump into that then. Okay, so after reading the transactions, we know immediately, then we now obviously begin with our journals. So the first journal they gave us, according to our answer book, was obviously the debtors journal. So we throw in that Kayla, all right, transaction happened on the 1st. Okay, we know that the debtors control column is always the VAT inclusive. Output VAT is obviously the VAT amount, and then your sales is the VAT exclusive. Okay, they told us on that transaction, how much did they tell us? They told us that the, what is it, markup is 50% on cost, and that's what you can see that I'm calculating here in B. Okay, we want cost, so 100 over 150 times 36,000. That's how we're getting the 24,000 that we calculated under cost of sales. Okay, then this scrupulous transaction, which we say we're just going to record in the debtors journal with Walter, plug in that 72,000. All right, and then obviously calculate the VAT, and then we get our sales. They had already given us the cost price, so we don't need to calculate anything. It's there in the transaction on the 11th. Okay, then we move on to the next journal. That's all we had to record for the debtors journal. The next journal we had was the debtors allowance journal. Okay, and on the 7th, Kyla returned some goods. Kayla. There, can you see they gave us 3,600 excluding VAT? Okay, so we know that the excluding VAT amount is going to be under the sales. Sometimes they name this column sales or sales returns. Okay, either way, you should be comfortable. Okay, so there we can quickly throw that in there, and then we know that the debtors control, like the creditors control, inclusive of that. Okay, remember they said only total your debtors control, the rest don't total. Okay, and then we calculate our cost of sales. What did they tell us the markup was on there? For that transaction on the 7th, you would have to go to the transaction on the 1st, where we used 50% on cost. Okay, and that's how we got the cost of sales. Okay, then we know on the 12th, accepted unwanted goods returned by Walter. Okay, they've given us the cost again, and they've given us how much the value of those goods. Okay, and we then act accordingly. All right, awesome stuff. So that's your debtors allowance. What was the other journals that they wanted us to do? Let me quickly rotate this. Was it just those three? Like it was more than that. Was it just those three? It was 4. Oh, okay. Then there was the ledger account, the general ledger account. Okay, we'll get to that now. Okay, so now we need to record the transactions pertaining to the general journal. Okay, so we marked the transaction on the 11th, where the owner took trading inventory for himself. Okay, so we know that drawings is going to be involved there. Okay, we know that trading inventory is what was taken out, so that's also going to be involved. And then we know there was input VAT that we claimed when we bought it, so output VAT to reverse that. I'd advise you start here, just write that down, then you say, okay, what are the actual amounts? So they gave us the selling price, including VAT. So we want the selling price excluding VAT. Sorry, we want the cost inclusive of that. Okay. So here, what I see that I have done, I think there's actually an error here, because what I have actually done is here I actually calculated, first I took the selling price, including VAT, and I actually took off the VAT. Can you see that? I didn't need to do that if I was going to first plug in an amount here on drawings. All I needed to do was to simply say this 31,350 times 100 over 125 to get the cost price including VAT. Because remember, drawings is inclusive of VAT. Okay. Once I have that, then I know inventory is the cost price excluding VAT. So actually under inventory, I should have this 22,000. That's how much I should have under inventory. If you're working on the 14% VAT, okay? And then, so what I'll have here under drawings will be actually slightly higher, okay? And then, yeah, the VAT amount will be the difference between the two, your output VAT, okay? Right, okay, right. So that was that first general journal transaction. Then the next one, where Kayla paid 40,000, all right, and then she was given a settlement discount. Fortunately, here they're giving us the amount of the settlement discount. Sometimes we would have to go back to see every transaction we've done with Kayla and then calculate how much did we discount her. Okay, but fortunately, they gave us the 1,710 was the discount. So we're then saying, okay, we know the debtors control is going to be reduced as a result of that. Take off that whole 1,710. Okay, then we know sales is the settlement discount exclusive of that. Okay, so we're going to debit that because we know sales is an income. So to reduce that, we have to debit it. Then we know input VAT because we're reversing the output VAT that we declared to SARS when we initially sold to this debtor. And that is that. Any questions? Everybody good there? Cool. Then the last one, Walter had been declared insolvent. His account of 69,000 needs to be written off. Oh, so he didn't even give us a, 40 cents on the rand or anything like that. All the way insolvent. Okay. So we know that debtors control is going to be affected. All right. We're going to write it off the whole 69,540. Then we know, okay, some of this, when we initially sold, there was output VAT, so we're going to reverse that with an input VAT transaction. We calculate the VAT on that. We have our input VAT. Then we know the difference between the two is going to be your credit losses, okay, which is an expense account. That's why we're debiting it. Okay, right. Okay, okay, so I think we're now, oh no, we're not done. We still have the general ledger. Okay, for your debtors control. Okay. So they gave us the opening balance, if I recall correctly, yes, 256,700. And then literally all we need to do is then go into each of the journals that we did and then see what were the totals, what were the totals that we got for any column that said debtors control. Okay, so when we go to the debtors journal, that was the first journal that we did. Can you see here? You write sales and VAT. All right, DJ under folio. Guys, whenever you have a general ledger account, we are looking at the folio. Okay, so make sure you're on the ball with that as well. Details and your folio. And then you plug in the amount there. We know it's going to increase what is owed to us because it's coming out of the debtors. What happens in the debtors journal every time we sell on credit. Then we go to the debtors allowance journal. We know that there we're recording where our debtors have returned goods to us or have requested a rebate or we've overcharged them. Okay, so there, sales returns and that. This is stuff you don't need to cram if you understand what's happening. Okay, but yeah, just make sure that you know what's going on. Then DAJ under folio, and then we put the total that we had there on that column for debtors control. Then we go to what we did, the general journal, and in the general journal, that's where we had our settlement discount. Settlement discount of 1,710. So we quickly plug that in there. Sales and VAT. All right, then we obviously also had our credit losses that also took place in the general journal. Okay, then here I see bank 40,000. Let's see here quickly. We obviously didn't record the cash receipts journal. This was a very good one. We obviously didn't record the cash receipts journal. So obviously you wouldn't have had like a whole column for it. So here you would have actually had to have applied your mind in order to get that bank 40,000. Yeah. Yeah. But I do think that I do think that was actually the right way to go, because obviously, had we recorded this transaction, it would have affected your debtors control column in the cash receipts. So yeah, it's one of those we throw in so you don't get 100%. Here, can you see it's 45 marks? So, guys, there's no avoiding journals. That is pretty much the cracks of what we're doing here in Accounting 1. Are there any questions, thoughts? Guys, do you know how to balance an account? All right, so happiness over there. Right, then finally, last question that we have for today is question 5. And question 5, under the required, they say complete the wages journal for the week ended 30 April 2018. I'm going to quickly check something. Make sure we are okay. Let's go good here. Awesome stuff. Okay. By completing the missing amounts for M Messenger A to I, okay, round all amounts to the nearest rand. In your answer booklet, write your answer and applicable workings next to the corresponding letter. Okay, no problem. Second bit, post the wages journal for the week ending 30 April 2018 to the following accounts in the general ledger. All right, balancing is not required. Hint, remember to start each account with the opening balance, okay? Wages expense, okay, all right. EMP 201 control, Uif contributions, okay. Then the next thing, they say calculate the amount of PAYE that would appear in the EMP 201 return for law couriers for April 2018. And then lastly, it is stated that all employees are paid by issuing a cash check. What amount needs to be cash to pay the employees? So here, you know what they're testing you on? You can actually answer that right now. What are they testing you on there? What amount needs to be paid? Okay, what is going to tell us what amount needs to be paid? What amount do we pay out into your bank account as your employers? Salaries, yes, but gross? Net salaries, ne? Okay, so that is what they're basically testing you on. See, do you understand that it's only net salaries that we're paying out into your bank account? And then obviously they also wanted to say how much. They also say how much in that question. So you would have calculated that in the wages journal. Okay, because we're obviously going to have the net salaries after all the deductions. But anyway, let's get into that question. I think also going to have to read the top bit. I think we didn't do that, but we'll do that just now. Let's see here. Let's see here. The following information relates to the employees of Law Couriers for the month of April 2018. Law Couriers has 3 employees who are paid hourly, a work week consists of 40 hours. Okay, no problem. So basically they're telling you anything more than that, overtime. All employees are paid by issuing a cash check. All other payments are made by EFT on the last day of the month. All right. All employees belong to the Judge Pension Fund. The employees contribute 7% of their wages for normal time only. Okay. Law Couriers contributes rand for rand. Okay. So if I contribute 1 rand to my pension, the company is also going to contribute 1 rand. Each employee must pay UIF, all right, and Law Couriers contributes to UIF and SDL in accordance with the law. SDL remuneration is gross wages less deductive retirement fund contribution. Okay, can you see how they're always changing the ball here and there? In the question we did yesterday, we used different principles to calculate the SDL. Okay, and in the other day we used different principles to calculate UIF. The UIF remuneration is equals to the gross wages, and no employee's UIF remuneration exceeds 14,872. Much like your textbooks, I think they use the exact same amount. Okay, for the month. Okay, no problems there. Then total PAYE on 27 April, ending the previous week, amounted to 7,002 rand. The following balances, amongst others, appeared in the general ledger of Law Couriers on 23 April 2018, the end of the previous week. Remember, you are doing the books for wages. So can you see, when it comes to wages, since we're calculating how much wages do we owe these employees every week, and we know that our whatever deduction is based on how much they generated in that week, we then have these constantly changing balances. Unlike the salaries, we know, okay, we're paying this person this amount, so we do that calculation once. So that's why they're giving you all of this. And remember, this is what I told you when we were doing salaries and wages. It's the only difference between the salaries journal and the wages. It's this element, okay? But otherwise, everything else is the same. Okay, so we've read all the information there, I think. All right, well, then we just need to fill in the missing bits over there. Okay, so they want us to do M Messenger from A to I. Okay, so when we look at M Messenger for normal time, in other words, for A, they told us that it's 40 hours normal time. So he's done 50, so that means 40 hours normal time is what we're going to slot in A, and then for B, we're going to slot in 10. Now that we have that, we then say, okay, we know that the rate for normal, according to the table they gave us, is 110 Rand per hour. So 40 times 110 Rand per hour plus 10 times 220 Rand per hour, okay, for the overtime. And that should give us an amount of your 6,600, okay, done. So that is C. Then we move on to D. D, we're calculating UIF deduction, and we know it's 1%. UIF is 1% of, here they said 1% of your gross. Yes. Okay, and we know this is less than 14,000, so no problems there. So 1% of that 6,600, and we get 66 Rand. Okay. And then we move over to E. E, now we're calculating the pension. Pension, we know is 7%. 7%. And was there any special treatment there? Where is it now? Okay, yeah, 0.2. But only the normal. Okay, so 7% of the 4,400, because it's only the normal hours that we're calculating pension on. As you can see there on, let me just zoom in a little bit. If we can afford to do that. Okay, right. So 7% of that, and we get 308 Rand for E. Then F, what's going on with F? F, now we're looking at the net wages. Okay, net wages, we know that net wages is your gross minus all your deductions. Okay, all right, and I'm just going to say this again. I think I said it yesterday or the day before. Your net wages is your gross minus your deductions that are coming off of the employee. We don't deduct also the contributions, because remember, contributions is coming from the employer. Okay. Anyway, so that's exactly what we've done. We take that 6,600, we minus UIF, PAYE, and pension, and then we get 5,556. Okay, cool. Then we move on to G. G, remember UIF, we know it's 1% deduction from the employee, 1% from the employer. So we know that this is also going to be 66 Rand. We don't even need to waste time calculating anything. Okay? It looks like your lecturer did, but you didn't need to do that. You could have just put R66. I would have given you your marks because I'm sure you know the principle, or you should. Then H, we move on to H. Pension fund, remember they said Rand for Rand again. You don't need to do the calculation. Maybe you want to just make sure you get your marks. You can do so. You can show it just in case maybe you made a finger error the first time you calculated. It's cool. And then we plug in that 308. That's what we got. Then finally, that's what they want us to do in I. SDL. SDL, I remember they said something interesting with SDL. They said, is the gross wages less deductible retirement fund contributions. Okay, so we're taking, what was the gross? The gross was 6,600. Then minus the retirement fund contributions. Retirement fund contributions. Okay, so basically that should then be your employer's contributions. Okay, so we take that 6,000 and then minus the 308 from the employer. Okay, and then we arrive at that 6,292, and then we say 1% of that, because we know SDL is 1% of 1% of the person's wages or salary, depending on what you're working with. Okay, and then we arrive at that 62 Rand 92 cents. Okay, and remember they said round off to the nearest Rand. So that is what we have done, and we end up at 63 Rand. Okay, so we're done with that. Wages journal, salaries journal, easy peasy. As long as you can do English or understand English. Salaries journal, wages journal shouldn't give you problems. Okay? Then we move on to the general ledger, and this is where I start to see things. I start to see things when I know this is being included in the test. I am like, ooh, I can only hope for the best. Okay, I can only hope for the best. Okay, let's see if we can. Okay, it's only one side, so I think we'll just leave it like this. So, wages expense is the same as salaries expense. You're going to treat them the same. Okay. So, they told us that we had a balance there. So we need to include that balance where they showed us the list of opening balances. Okay. Wages expense, yes. So we throw in that 65,820. Then we need to find the gross wages. Okay, so we have to go back to that table where we're filling in A to I. And there you see, okay, we now need to, since you see at F we calculated what M messengers was, we add up all of those to get the net, and that's how we're arriving at that 22,930. And then we obviously balance the account. Since all the amounts on one side, easy peasy stuff. Okay, so that's the first thing they wanted us to do there. Then they wanted us to do the EMP 201. Here I see miracles. Here. Okay. Right. So okay, cool. Notice something interesting. In question 5.2, they say post the wages journals for the week ending 30 April for the following accounts in the general ledger. Okay. They did not say post and make payment. They just said post. Okay. So that's what we're doing over here. If they had said make payment, we would have also had to say bank and showed on the last day, 30 April, and then paid the balance of whatever is owed on that side. So I'm just showing you that just in case, if ever they say and make payment or record that payment was made, then you know, okay, I also need to record on the other side bank that this thing was actually paid out. Okay. Anyway, so they gave us an opening balance. We need to throw that in. Then we know, okay, we have, remember here you usually have salaries expense, but because we're dealing with wages, we're saying wages expense. And then obviously we had calculated, we have to total the Paye, all right? And then we plug that in for all the employees. We also have to then calculate UIF, all right? Add it all up for all the employees, all right? So that first is UIF, the deduction. Then we also need to plug in the UIF contribution. Okay. Then lastly, the SDL contribution. Okay. So it's very simple, but it just requires you to understand what's going on. Remember, the EMP 201 is for SARS. Okay. What does SARS want to see? It wants to see that PAYE, in other words, tax, was deducted and paid by you, the employer. UIF was also deducted, and also your contribution to UIF, and then SDL, okay? And then obviously, yeah, just those, okay? Right. Then we obviously just total that, and then we're done with the EMP 201. Any questions there? Okay. Remember, this is something I was sharing with one of the students. The reason why this is on the credit side is, remember, we are calculating this at the beginning of the month, but we're only paying it at the end. So we owe SARS this money. Does that make sense? So that's why we say these are creditors in our mind. These are creditors because we're not paying them right there and then. We know that we are only paying them at the end of the month. We owe them. Okay, but anyway, let's move on. It's a liability. Now, UIF contributions, this is an expense to us. Okay. It's an expense to us. We have the opening balance, and then obviously we just say EMP 201 control. That, can you see the double entry taking place there? All right, awesome stuff. And then you're done with that section. Okay, so here they're quickly just testing. Do you understand the difference between between the contribution side of it and the deduction? Because contribution is an expense to us, and then deduction is a deduction. It's like an expense to the actual employee because he's losing money, not us. Okay. All right, cool. Then 3.5.3, calculate the amount of PAYE that would appear in the EMP 201 return. Okay, so this they should have probably asked before we did the EMP 201, to be honest, because now we actually have that answer. But anyway, you go back to that block where we're filling in things, and we just look at the PAYE, and you see the total there. Okay, you get the total there. So there was really nothing to calculate here because it's, whoa. Calculate the amount of PAYE that would appear in the EMP 201. Yeah. So you got that total, right, for the week of 30 April. And then I guess you then just need to add that to the opening balance. Yeah. Okay, now I see where the calculation is. Can you see that they didn't give us a balance for the PAYE at in that table where we have the opening balances? So what we then need to do is we need to then say, okay, so if the EMP 201 control, if the opening balance was that 9,000, for what we then need to do is to then minus UIF and SDL in order to arrive at the PAYE. Okay. So let's see, is that what we did over here? Uif contribution. What is going on over here? I do not know why we are doing what we have done over there. What am I doing over there? Yeah, they want us to calculate the PAYE that would appear in the EMP 201. Yeah. So I don't know what the hell I was doing over there. You see, that's UIF contribution. But where am I also getting the 388? Just quickly see. Yeah, I've got no idea what it is. So yeah, just ignore that. What you should have is you should take that EMP 201 control. Like I said, we want to find the, what is this? We want to find the amount that is PAYE, the opening balance of that. So let's see if I can quickly do it somewhere here so that we can actually calculate it together. I'm not going to, maybe we'll just use the chat. Yeah, because I don't have that worksheet open. So the balance that we have is this 9,005. So then we are going to say minus your UIF contribution of 658. Okay, we know that the employee we're deducting the exact same amount, so we're going to deduct this again because we know in the EMP 201 we have the deduction for UIF and the contribution from the employer. Then we know we're also going to deduct the SDL. And the SDL there is 737. Okay, so now can you see, if you look again at our previous question that we did, where we did the general ledger for the EMP 201, can you see now we've did UIF, all right, contribution, the UIF deduction from the employee, all right. Then we've also removed the SDL, all right. So can you see now how we only have the PAYE amount? That's all that we then have, okay? So then we go back, let's go back. That difference is going to give you the SDL, amount. Okay, and then what you're going to do is you're going to then add, it's going to give you the PAYE amount, and then you're going to add the PAYE amount for the week to get to the end of April. So here we're then going to say plus, what did we calculate for this last week ending 30 April? All right, and that is your 2,334. Okay. That should then give you the amount, the total amount that should appear in your EMP 201. Yeah. And you should be home and dry for the month of April. Okay, well, that's all recorded. What amount do you guys get when you do that calculation? I just want to write down the amount that the students should have. Oh, okay. Actually, on this screen, that's a bit problematic. Let me just do this. Let me actually just calculate it over here. It's actually going to be a bit easier. So, okay, so 9005 minus 658 minus 658, and then plus 2,334. Okay, you get 10,023 rand. Okay. Right. Okay, no problems there. Okay, let's quickly then finish up. I think we have one more question and we're done. Am I right? Okay. We got a different amount there. I'll have a look at that later and see. What was I thinking? All right. So lastly, 5.4. Oh, we actually answered this question before we began. Yeah, we just didn't do the calculation. So what were they saying? All employees issued a check. What amount needs to be cash to pay the employees? Okay. So we know that it's the net salaries or net wages in this case. All right. So we go back to see, okay, what did we calculate in our wages expense? We have that 8,800. Should actually, yeah. What did we calculate here? Where am I getting this? All the employees are paid by issuing check. What amount needs to be cash? Yeah, so over there, if you go back to your table over here, you just add those amounts under net wages. Because remember, the previous weeks, we've already issued those checks. Because remember, wages, we are paying weekly basis. Salary, only at the end of the month. So in this question, I looked at it the second time. You can see that they just say what amount needs to be cashed to pay the employees. They don't say how much was paid over the month. So then you can just go and add that amount that you get in the wages journal. And that should be the correct answer there. Are there any questions on anything that we've done this whole semester? Because you won't be seeing me again. You are welcome. You're welcome. All right. Otherwise, guys, let's enjoy the day. Get ready for the 7th of July, I believe it is, right?